The economy keeps swinging wildly from supply shocks to bursts of demand. Are you prepared for what's next? Understanding this whiplash economy is urgent for your money and investments. Economist Claudia Sahm describes today's economic environment as a whiplash economy. Unlike typical swings driven by demand changes like tax cuts or recessions, this economy is buffeted by a series of supply shocks. These shocks cause prices and inflation to surge unexpectedly, making it hard for policymakers and investors to predict what's next. Supply disruptions can push costs higher even when demand isn't booming, creating a gray zone economy that challenges traditional economic tools. Sahm highlights that because of these supply shocks, the Federal Reserve is likely to remain in a holding pattern on interest rates. The Fed must balance inflation concerns with the risk of choking off growth, since supply problems can push inflation up independently of demand. Raising rates too quickly might worsen economic pain without solving inflation. This cautious stance reflects the complexity of managing a whiplash economy. For investors, the whiplash economy means market swings will continue. Morningstar advises focusing on companies with long-term competitive advantages and intrinsic value. Real-time market trackers show fluctuating movements across major indexes and sectors. Staying patient and grounded in fundamentals can help you weather the ups and downs driven by unpredictable supply shocks. Supply shocks are particularly tricky because they can increase inflation by raising costs rather than by increased consumer demand. For example, disruptions in production or supply chains make goods scarcer, pushing prices higher. This differs from the usual inflation drivers like booming demand or tax cuts. Understanding this mechanism explains why inflation remains high despite mixed economic signals. In a whiplash economy, your financial decisions require extra care. Inflation may rise unpredictably, and interest rates might stay steady longer than expected. By focusing on quality investments and monitoring market trends, you can protect your money from shocks. Staying informed about supply dynamics and Fed policies will help you anticipate changes and adjust your strategy accordingly. The whiplash economy is reshaping how we think about inflation, rates, and investing. Understanding supply shocks and the Fed's cautious approach can help you navigate uncertain times. Stay tuned to Daily Q&A for clear insights and tips that protect your financial future. Don't forget to subscribe and hit the bell to stay ahead in today's volatile market.